Like we think it's an easier strategy to solve one problem for one customer and do that globally. But the reality is if you just stay in our market, you're going to have to tilt. And I think that's still fine to do. But if you're going to do it, max as much of the market share in product A before you even use any brain space to go into product B.
And so the blanket statement of people can't hack it and they leave, that's great. I think that is just too black and white. Yes, you want to weed out the weak that are not going to be part of the vision and mission. And we've become so fun woke and everybody's feelings are valid and everybody has to fit in and there's no resilience anymore. No, if you can't handle this, grow up and leave. It's not for you. I think people have to take accountability for some of those things, but at the same time, some founders tend to end up when they're stressed becoming assholes, and it's not good for them and it's not good for the business.
I was reflecting on that call yesterday and why Val crept into my head, but I think it's in there because in the absence of other elements of conviction being true, I just don't have conviction that they are going to win, which then the Val becomes an easier thing to hang to as the issue.
They talked about 7 powers and they actually went through 7 powers for founders. The episode was the 7 most powerful moats for AI startups. And they used the 7 powers as a reference point. And they said the one thing that the book doesn't have as a moat is speed. And so I thought that was really interesting given the conversations we have internally about 7 powers, and then obviously this article all coming together into what this team had really talked about.
Well, that was a big bloody yawn. Are you tired? I'm tired.
It's that time of year. We're almost there. I was just on with Aaron. He's just trying to get his headphones.
What have you been up to?
I went to the first day of the Ashes yesterday. It was hot. It was very
I've got
hot.
Tyler's working on the pool at the moment in the full sun. I think it's 33 degrees today and a lot of humidity, but I would like the pool finished before Christmas.
Exactly. Yeah, it was meant to be 39 today, so we were like, oh, maybe we'll give it a miss. But it looks like it's shot to 33, so we might go in for the post-lunch break, but we'll see.
Jack, looking at you now, I now realise your head's upside down now.
Yeah, I've only got hair on top.
It's just upside down now. You're growing the beard. What have you been up to, Jack?
I got my sister down with the twins, so they got down. They came over last night for dinner, and then
Twinsies.
got my brother. Yeah, the
How's
twins.
she doing? Is she still sane or?
Yeah, like as sane as she can be. It'd be like bloody hard work, but she's still good.
That's awesome.
I guess it gets them out of the way reasonably quickly, but are you going to be left with a functioning brain afterwards is the question.
Yeah. What
so she's got 2 twin boys, and you would not know that they're related. Like they look so different.
Yeah, right. What have you been up to, Aaron?
Well, my dad came to visit for a few days, so did some minor renos with him, put up a wall for the 5th bedroom and a few pieces like that. And then...
Is that a euphemism for the father and son relationship? Put up walls between each other? Or?
Well, at my age, he's trying to take down the walls between you and your parents, but that's a whole other conversation.
Oh, okay. I'm doing it wrong.
But no, just juggling work and everything else. So not much else to report.
Let's get into some topics. This one jumped out at me. Speed Wins by Bronwyn Clune of Capital Brief. From solo founders raising millions overnight to incumbents struggling to keep pace, our coverage this year shows how AI rewarded velocity, stripped incumbency of its usual advantage. Looking back at our coverage of Australian startups this year, one theme cuts through. AI touched everything, but its most immediate effect was a brutal reshuffling of advantage. Speed was rewarded, incumbency in many cases was not. Unicorns that spent a decade building a market position are now scrambling to adapt. Startups that barely existed 12 months ago are competing globally. Harrison AI, Lorikeet, Heidi Health, and Relevance AI all gained serious traction. The way companies are built changed too. In October, 22-year-old Alyssa Wu raised $2 million in 36 hours for her startup Lucent before she had employees or a product. The flip side has been brutal. Culture Amp embodies the incumbent squeeze. Revenue grew just 11%. Blackbird wrote down its stake by 23.5%. and the company cut staff. A decade of building now risks looking like technical debt. Unless you're growing at 50 to 100%, you don't get burn money, Culture Amp CEO said at the time. Employment Hero was among the companies pushing hard on AI adoption, with Ben Thompson telling staff that failing to move quickly risks missing the wave altogether. Canva, however, is the counterpoint. Proof an incumbent can lead rather than chase. The $49 billion company snapped up two of the country's most promising AI startups, Leonardo AI and Magic Brief, and the latter for more than 20 million. AI does not appear to allow much breathing room. Physical AI already looms as next year's big theme. Lessons from 2025 is not that AI favors startups over incumbents, it's that it favors speed over structure. In a year where ground shifted fast, advantage did not accrue to the biggest companies or the longest track records, it accrued to the fastest learners. And I thought that was an incredibly excellent summary of the situation by Bronwyn.
I think it's a really good summary, and articles like this are really good. And I was surprised, actually, I don't know if we talked about this. I was surprised Capital Brief didn't rate higher in the Startup Muster news sources, given the quality of content they produce. Yeah.
And Bronwyn and others turn up to the events. That the only other person that I know that turns up to those events is Tomo from Startup Daily.
Yep. So, yeah, for listeners who haven't subscribed to Capital Brief, it's worth it. But yeah, on this one, like there's parts of this where I feel like when they're talking about the way startups have built has changed, I don't think the way has changed. I think the speed, the velocity at which AI companies can raise capital, which is the data point they reference, yes, that's changed. I also think this is similar to previous cycles where a new tech comes out hyped. It's just the timeframes have condensed. I think the other thing, like Culture Amp CEO's comment around, unless you're growing at 50 to 100%, you don't get to burn money. I think, again, there's an element of that which is cyclical, like at different times in the venture capital cycle, there's different tolerances for capital inefficiency. But also, I think in that it's also a quirk of the Australian market, like the US market, Silicon Valley, unless you're growing at those rates, you don't get capital. So I think, I don't know, I'm not sure that there's much new here. For me, it's just basically capturing what we already know, which is timeframes are absolutely compacting, and it's just compressing timeframes for raising capital, timeframes for getting revenue, and timeframe we'll see on the liquidity side. I still think there's a whole heap of capital that's going to be lost in this kind of AI evolution, but a good article to get these points across.
Yeah, it reminds me of a recent podcast episode I listened to from the Litecoin. Have you listened to that Litecoin podcast?
No.
They're really, really good. They actually had, I should have sent it to you guys, you would have loved it. They talked about 7 powers, and they actually went through 7 powers for founders. The episode was the 7 most powerful moats for AI startups. And they used the 7 powers as a reference point. And they said the one thing that the book doesn't have as a moat is speed. And so I thought that was really interesting, given the conversations we have internally about 7 powers, and then obviously this article all coming together into what this team had really talked about.
Yeah, for listeners who haven't read Hamilton Helmer's 7 powers, they definitely should. And I feel like they'd make a great sponsor for the potty, given how much we talk about. Jack, you should absolutely have some 7 powers swag sent to you.
Definitely.
Do we wait for Don to come back?
Yeah, let's wait for Don.
Do you have anything on this one, Jack?
Nah, I don't have anything to add there.
Hey, since I was late joining, did Don talk about Mick's Chrissy party?
No.
Oh, okay. We'll have to,
it looked pretty cool.
Oh, fuck, it was good. They're a hilarious couple. Bloody good value.
Sorry, I'm back.
All good. We wrapped up that one. It's ready for a segue or your comment, Don. But then we started talking about Mick's Chrissy party. I just referenced it.
For the record, if your wife wants French pattern tiles, make sure you find a tiler who's done French pattern before, because we're learning on the job, and that's why I had to go out there as if I know anything about anything.
I have no idea what French pattern tiles look like.
Is this for the pool, Don?
Yeah.
Yeah, cool.
What is wrong with the English pattern? So anyway, we'll segue. Was there any lessons for founders in there, Jack?
No, there wasn't, but I'll think of one for them.
Come on.
French pattern looks pretty good, so I'm with her on that. That'll look good.
Have you just Googled it? It does
Yeah.
look good, doesn't it? The
Yeah,
only
yeah,
problem
yeah.
is I fear if they don't get it right, it could end up looking really bad.
Was that not in the brief?
Ash, why are you still asking these questions?
Yes, the problem is when you own a builder, it'll work out. It'll work out. It's like little things, like a French pattern obviously has a certain amount of pattern, but the lesson for founders is that the distance from the coping to the end of the concrete is 30 millimeters larger than like the whole French pattern together. And so what we're trying to work out is how we deal with that little 30 centimeter gap. Now, the reason why it had to be that distance is that anything closer, you have to earth your pull fence, which means a little wire on each pole coming down into the ground, which looks shit. And so these are the little things you only learn, that going your 1200 mil from your water's edge is actually going to conflict with the 1170 of your French pattern. Good decisions come from experience. Experience comes from bad decisions and a lack of knowledge. And a lack of knowledge comes from, I don't know, what's the saying? Being an idiot. Anyway, let's... what the segue out of this is that I think it's fair to say that we have been talking a little bit that there is some power and incumbency in the age of AI. And as Bronwyn's article has demonstrated, Canva has highlighted that. But actually, there is some threshold table stakes required. Like, your product has to be good, A, and B, one of the traps I think a lot of founders fall into is, oh, I have these customers that buy this thing from me. Because they're dealing with me, I can then start selling them this other thing and they'll start buying it. And that often turns out not to be true. And there was a post by Linus Belunis. Turns out Microsoft just learned the hardest lesson in AI: distribution does not mean usefulness. And what he's saying is that there's been a report to say that Microsoft has quietly cut internal Copilot sales targets by 50%. He points out that even though they had all of the ingredients to be really success with AI Copilots, Office, Windows, Azure, OpenAI access, but it hasn't worked out. I tried it a couple of times and it was shit, like really shit.
This made me think of, Don, the conversation we had with a group of wealth advisors who were adamant that Copilot would win, Microsoft would win because they own distribution.
I remember that. That's right.
So, yeah, this is such a good point. Just having distribution doesn't mean you can just sell XYZ. So shitty product, absolutely. Like Copilot is a shitty product. I every time I experiment with it, what comes back is just horrendously bad. And there's been a number of issues with data breaches or like data being shared that shouldn't be shared and all sorts of things. But I think this is a good point, like where founders often talk about, oh, we will get the customer here and then sell XYZ, but speak about it as if it's just a given. Whereas no, there's definitely nuances that, and even with us, right, as an investment firm, the different type of investor that's attracted to a syndicate versus a captive fund. And just thinking that because we have investors, they will be interested in all investment products and types is not true. It's a different type of investor. There is some overlap, obviously. But yeah, I like this post, and I think I might have a little guilty pleasure in resharing it and making some comments for potential people that may have said things differently in the past.
It's funny at this time of year and where we are in the raise, we're in the what would be the we're in the childish resentful phase. So I look forward to resetting coming into the new year.
Exactly. Ash, you must have some thoughts on this.
I have so many thoughts on this. I'm very pleased that all of my ranting over the past 6 months has infiltrated your brains, though. Yeah, I think for us, we aren't a Microsoft house, and that is by choice. And most, actually all but one of our client base are. And we are still being brought in. And I think that is a reflection of what you have both just outlined. It's hard to get right with Copilot. There are some businesses who have. The other thing we find is that if you're at the top of the food chain in an organization, you might actually really like Copilot, and that's because you have permissions to see everything. But getting the permissions right, it's quite difficult because it's based on generally your single sign-on inside of organization and how your business is actually structured from a siloed perspective. So as an example, we have a client where their marketing team doesn't sit in the same organizational structure that event sits in. Event sits under operations. And so they can't actually see anything in Copilot as it relates to what's been happening in events, because that's the way that their data is structured, and then that infiltrates down. It's just not, it's not user-friendly. It's expensive as a product as well for organizations to roll out. And then if you get into Copilot Studio, which is the agent building side of it, it's even more expensive.
Just to tie it back to what you said, Don. So entrepreneurs often think that because they sell to customer A, they can then sell to customer B. And I totally agree with that. But I think the reality is, if you're an Australian software business, unless you scale globally, you're going to have to tilt into other markets and therefore sell different products or services to other customers to get a venture return. And we don't think that's the best way to do it. We think it's an easier strategy to solve one problem for one customer and do that globally. But the reality is, if you just stay in our market, you're going to have to tilt. And I think that's still fine to do. But if you're going to do it, max as much of the market share in product A before you even use any brain space to go into product B. And I think once you do tilt into the other market, you've accepted that the growth in product A it's no longer. So then all your focus has to go to product B. And I think so much of the success ties back to focus. And that's why it's easier to just solve one problem for one person globally.
And if you do need to tilt or have an impulse to ignore the advice of the whole world not to, try and make sure you're tilting into stuff that's pretty close. The further you go away from that, like the little concentric circle away from that customer, the harder it gets. And the silliest example, this is not all that relevant, but before my time with the childcares, because we have a very entrepreneurial drive, there was a spare office next to one of the childcares, and it was like parents need haircuts for their kids, so they hired a hairdresser to then sell hairdressing services. And it just, I wasn't around, but the pain that it caused, because it's they're already coming past, so we can sell them this service. But people turn up with a mindset that you deliver a certain value proposition in their life. That's where they see you. If you then start to actually randomly come from left field with this other thing, it actually dilutes, and they can feel sometimes just what the hell is going on here. And sometimes, I'm not saying that is a good example, but sometimes the randomness that I see out of entrepreneurs, because customer A is buying this stuff, I'm going to go and sell this random thing over here. It ends up hurting you.
I think one situation where we see this play out is after a big capital raise, when the founders flush with resources. And they look, I don't know, there seems to be this bias of founders as, well, we'll just create an adjacent product to sell to the same customer, thinking that's easier than getting new customers, versus just do more of the same, get more customers, own the market. Once you own the market, assuming you've got some durability and ability to create pricing power and other things, what you can do then is very different. But I think there is a perception of ease to sell to the existing customer base rather than focus on new customers.
But I think partly to, like Jack's point before, was about maxing out TAM. If you're going to stay in Australia, you're going to route out of TAM.
Yep.
If that was the case, I reckon that's probably okay. But 99 times out of 100, people are doing the tilt thing because they've got a product market fit problem in their core product. Like it's actually, they're going after new products, new markets, because the other product isn't doing what they would hoped. And if we can just go and do this, we're going to be okay, instead of actually solving for the underlying issue. So I'd be happy if it was more on what Jack described, but 99 times out of 100, it's actually, there's a core problem that you're running from. And instead of bloody dealing with that, you go and solve it with more complexity, and it never works.
Yeah, totally agree.
But there are some companies that are getting a lot of value, and that value is not accruing to the employees that are not getting on board. And there was a post this week by one of our portfolio company founders, Nigel Fellows Freemans, who's the CEO of Canopy. Canopy is just a great case study of stick with it, do the right things in the right sequence, don't lose your head, don't burn your bridges with customers that behave like, and you'll get there in the end. And Nigel posted, if you are an insurer and you're not taking agentic AI seriously, this from Chubb should make you look and think. They've just announced that they're going to cut 20% of their workforce over the next 3 to 4 years in an AI drive to make a meaningful impact on its combined ratio. Now, this is great thought leadership from Nigel, because he then links to the article, and he then puts forward, if you want to learn how, start by watching our recent Agentic AI Roundtable with AI and insurance leaders from Zurich, Sava, and Colmeo. And I think, there's a lesson here in terms of just how he does the thought leadership piece. But we are starting to see more and more of these announcements. And that's why I think people really need to start looking at how do you add some of these things in. Otherwise, you're going to get lost.
Good post by Nigel, like good positioning. Yeah, and delivering value, hitting a topic that's very topical. And so for founders, like you said, Don, this is a good little case study in how to get that messaging out there and get it right.
And he's not flogging Canopy in this. He ran some agentic roundtables, and he's giving value first with some content that I think will be meaningful rather than just shouting from the top, buy my stuff.
Yeah. Delivering value, building trust and respect, becoming a source of truth and knowledge. So it's great positioning. Well done, Nigel. But yeah, I think we're seeing this everywhere now, right? Like just the announcements of workforce reduction based on AI tooling for productivity. And it's interesting, like something like this saying they're going to do this over the next 3 to 4 years as a statement, I think also changes the types of talent that will be attracted to work there in that context. So I think there is something about positioning yourself to, attract people who are interested in that type, and also probably lose employees who are not looking at AI as something to work with or embed as well.
Yeah, well, let's just shift positions for a little while. This popped up in my feed, and then this week we've had a pitch from a founding team. I think it's a great founding team, but the challenge is the VAL. And Harry Stebbings posted, 3 years ago, I made one of the biggest investing mistakes of my life. We turned down a chance to invest in 11 labs. It was a $250,000 check at 100 mil post. Today, that would be 100x, and that would have returned the fund. 2 lessons he learned. Fear of theoretical future competition is dangerous. OpenAI will just do this. Guess what? 11 abs will still win. 11 abs. Is that like a Freudian slip? I've got 0 abs at the moment. 11 labs will still win. Beware of thinking more about the future competition. And then 2, rules are meant to be broken. This didn't meet the ownership requirements of the fund. So ownership and VAL often go hand in hand. But when he met the founder, he knew that he was just amazing, and he should have justified the exception. This is a challenge that we wrestle with, I think, partly more than others, because we're a syndicate model currently whilst we close our fund. And so we are not just selling deals, we are selling deals within a return profile. And I do believe that if valuation starts to become a too big an issue in your mind, it's actually your conviction that is the problem. But I thought let's just discuss this, because we didn't get to do our investment call review yesterday. We talk about VAL being somewhat irrelevant for really great companies, yet we often ourselves get stuck with VAL. So thoughts?
Yeah, I was reflecting on that call yesterday and why VAL crept into my head. But I think it's in there because in the absence of other elements of conviction being true. Like I think if it had been another company doing something different in a space that I don't feel is hyper competitive, or someone else is the natural owner. But then the problem is I'm coming back to point 1 that Harry's making. Fear of theoretical future competition is dangerous. But I think with that particular one, I just don't have conviction that they are going to win, which then the VAL becomes an easier thing to hang to as the issue.
Yeah, I couldn't agree with this post anymore. And I think we can hide behind the fact that we're a syndicate, because ultimately, like, even if we're comfortable with the VAL, we have to then sell it again to the LP, which makes it harder. But if we were in a fund and then we passed on Val, it is 100% because we don't believe they are greatness. And I truly believe that greatness justifies exemptions.
Yeah.
Totally.
Sorry, exceptions, not exemptions. And like the classic Australian case study is Canberra. So if you couldn't get your head around the Val because they were pre-seed raising at 10 mil, let's say 15 years ago, well, you missed a once in a generational company out of Australia, probably the only company that's ever going to reach that same scale. And it didn't matter if you went in at 10 or you went in at 50 or even 100. Look at
or even a billion.
Exactly, yeah.
But the only thing is, if you throw out all your rules and then everything becomes an exception, and so suddenly so this was only a 250 check. Let's say he threw out all his rules and then wrote another $250,000 checks with the same thing. I bet you he fucks the fund.
Totally.
Like that's the challenge, right? That the survivor biaship of, oh, I missed this one thing because I didn't make exceptions. Well, what about the 30 other things that your rules kept you out of?
But Don, if we pull that back to the pillars, right? If we have 100% conviction in the team and culture, the market and TAM, the defensibility, and the only one we're grappling with is the Val. But
Totally.
if the TAM's big enough, if the TAM's big enough that you still like, there's no constraint for getting a venture return. It's now just on the execution.
Yeah, no, you're right. So if I think of those pillars, then yes, I have a concern about the market noise, and the fact that this ends up becoming a feature.
Yeah, I think that's the main thing for me on the one yesterday. It's a feature of someone else's product. But going back to your point, Don, about success bias, I definitely see that in his post here. Like the risk would be extrapolating number 2 could allow a whole heap of crap in that then destroys your return profile.
But to Jack's point, I think you're right, Jack. Like I think there's been 3 or 4 deals that we've been on a very different side to some of our larger LPs, and I think we're going to get rewarded.
Totally. Even on Canopy, right? Like that.
Yeah, Canopy. Yeah, that's true. Canopy was absolutely one of those ones, and that's demonstrating going to be a very good one.
But to your point, Jack, I see those pillars and sticking to exactly what you said as one of our rules.
Like, yeah, that is our rule. That's exactly when we do it. It's got to meet that filter. Yeah. But like the only reason it can screw up the fund is if the Val is too high because the market is capped at a multiple that's never going to get you the venture return.
Yeah.
But if you're going into something at 100 mil, but the TAM is 100 billion, you're getting a venture return. It doesn't matter about the Val if you have full conviction in every other aspect.
Yeah. Which also feeds into some of our combos in Perth, Don, around secondaries in much later stage companies and how there's still the potential for, well, liquidity events, but also the return profile.
Wow, Airwallex has shown that.
Yeah.
But I think that's a great one because everyone thought that was way too late stage. They're doing it for the management fee. But then takes one meeting with Jack or listen to his podcast app and you go, this guy he's greatness. And his thing's growing 50% did it just reach 1 billion ARR? Like they've had a 40% uplift in 6 months.
Yeah. And that's where sort of part of this game is pattern recognition, but then pattern recognition can turn into biases that hold you back. And so as my darling wife, I think I shared in a prior episode, said to me when we were reviewing our tax losses from the angel portfolio, because the angel portfolio always has some early losses, she made a very valid question. Why don't you just invest in the winners? And I was like, straight to the IC for you, darling. I had never thought of that. That is amazing. Please come and join our investment committee because it's hard.
But I often hear that even like very active investors, when you talk about the power law and the return profile, and they're like, well, why not just select different companies so that they're all the successful ones? Well, what do you think we're trying to do?
I think you're right, Jack. I think we're going to bring it back to our broad principles. I think our principles are correct. And in this instance here, I guess what I really like the founders. And I guess my brain, when I really like the founders, then tries to find reasons to really make it. But the majority of founders end up in spaces that either the customer doesn't care enough about. That wasn't this case because they've clearly got some signs. But that's not true. The customers do care about it. but they end up in spaces where you can create a great business, but can you create a venture return? And those are two different things, and that can be sometimes hard.
And I've got no doubt, like, because they're already past $1 million ARR, plus they've got other revenue sources. I have no doubt that they'll get the round done, regardless of our perspective on that.
And given we keep talking about Auto Guru every now and then, who's leading the pack of our anti-portfolio. For listeners, we had the opportunity to invest,
Well, this
90...
round, it'll be a 20 times multiple on this round.
We won't go into the reasons why
we had 3 opportunities to invest.
Why we couldn't, and they keep haunting me. Like on my LinkedIn, someone from Auto Guru the other day checked out my profile. I was like, is there like a concerted effort from Eden to just haunt us? But a shout out to Eden. He's a legend.
He's an absolute legend.
He called you and said, I really would like you. Yeah. What did he say?
He called me from the car the other day. I was just thinking about you. We're just doing this round at this Val, and I was just thinking how good it would have been to have Tribe on the cap table and for you guys to have this 20x uplift right at the time you're raising a fund. Like, he said it with a great deal of love, and he was fully appreciative of the help we did give him at that time and getting the strategics off his cap table and all the amazingness.
Well, not enough to give us a bit of, just throw us a few shares from.
Oh, I love you, Eden. If you are listening, it's so great. Like Barry, the whole team, like you want them to win. They deserve the win, and a few things are about to drop for them, which is just orders of magnitude huge. So I think Auto Guru could become a well-known name in the ecosystem pretty quickly.
Yeah, agreed. Anything on that one, Ash?
No, you guys covered it.
Well, so related to building unicorns, you've got to push hard. I thought I'd just play this little piece from a 20 VC episode because I still haven't worked out my full thoughts on it, but okay, maybe I haven't uploaded it. Please stand by. Please hold. All right, well, I'll have to play it off my phone and then I'll upload a quality.
I'm going to go back. The leadership thing is, I just say, for me, because I'm not a good rah-rah type leader, I was interested in Jason's comment, and I'm reflecting on it because I tend to be more the step back person, which I think is why I'd be a mediocre CEO and I'm okay as an investor. It was a great question. What are the signs you know? As an investor, when do I look at my companies and go, God, this guy's running hot, right? And I've been thinking about it. It's a super question. And it generally, when at least once or twice a year, I think to myself, Mr. CEO, and I have 1 or 2 in mind, are you pushing your team too hard? Even though I don't love the war metaphor mode, you are correct. It's only the wildly intense ones, the wildly driven ones that really have excellence. And I'm reflecting on my very best excellent companies. And every once in a while, the CEO would just lose his shit. He or she would be just so exasperated by the lack of progress and the drive they felt to win that you'd have that tension. And the bigger the team, the more people you have, the more simply you have to communicate. And therefore, you probably use simpler metaphors. And therefore, you probably have to go for some kind of, it's a war, we got to win, because that's what it takes to motivate 5,000 people and point them in the one direction.
Well, I don't know if it's the 5 thinking on it. I actually don't think you said you sometimes advise your CEOs to go easier on your team. I don't think you have to go easier on anyone great ever. Everyone great, every great leader, every great VP executive, and they're rare. They're rare. They're going just as hard or in some ways harder than the CEO. The CEO's job is harder. A lot of executives don't get how hard it is to be at the top, but in their own domain, right? CTO, CRO, they are going harder than the CEO. And so if this was 2021, everyone would say I'm being toxic saying this. It's not. Okay, we're going to 2026. I do not think you can push your team too hard. I think you should push them as hard as the business needs to go. And if they leave, it's great. It's terrific because they're not going to get you there. And maybe that's what Sam's doing. He's saying to us, there is complacency is set in. Everyone's getting to sell 20 million at a time. Turnover is high and it worked for a while. And now the competition is up. And maybe he's talking to 20 people and he's saying, I need you guys to go even harder. And maybe half will leave and half will do it. I think that may be the whole message. But I honestly think to founders, my number one bit of advice is do not go easy on your team. Love them, back them up. Don't pick at them. Don't back where they're good. Let them run where they're good, but push them even harder. The best ones will always step. They might cry or lose it for a couple of days, but they will step up.
or they'll go. And you're right, Jason. Generally, in your best companies, you're exactly right. Some people crash out because they just can't take it. My point is, how do you know the motor is running at full speed? The answer is you hear an occasional gear grind. And your job as a board member is to check in on the gear grind and go, oh, okay, I can live with that gear grind. It's okay. They're doing the right thing.
Let them all go for 2026. Let them go. Because they're not going to get you anywhere. They're not going to get you anywhere. The folks that it's too hard, like the job's too hard, right? I mean, literally in my fastest growing portfolio company now, at the last board meeting, the CRO stood up and said, I want to do more than the stretch plan next year. Calmly, not in front of, I want to do more than that, and gave a data-driven reason why. No one asked him to do it. You want that out of your team in the age of AI, or you're just going to fail.
I wonder, you can't put to the point of delusional. You can push to just one level just below that. But I actually think that's the technique to just really drive the team to the point where this is not realistic, and then just take it down one notch. Because it doesn't work if you lose your entire team. And actually, it could segue off you made this discussion on the war thing. As you point out, in the last 2 years since the OpenAI board change, you have lost an entire team at OpenAI.
There's a lot there, and in the portfolio support work we do, this is a big topic. Yeah, so much to unpack. Where to start?
I don't know where to start, but there was a little thing in there where he mentioned in 2021 this would be deemed toxic. And I think there is something about this cyclical rhetoric nature. And I think a good leader stays true to themselves and true to what works, regardless of the external noise. Anyway, that was a small thing that I just picked up on. But I'm thinking of different companies in the portfolio, different founders. And I think of great founders I've known. They push their teams bloody hard. Like I think of some individuals. But I've seen this where it blows up companies. Like I've seen it where I think there's a lot of nuances in it. I've seen it where pushing teams bloody hard has caused key staff to leave or resentment, and then you have almost like a silent exit. I don't know where the other thing that comes to mind is out of this one was complacency during good times, and I think good leaders are always pushing hard even when they have all the resources, and the difference between a wartime CEO versus a good time CEO and actually being able to transition across both. Because I think that consistency of execution, the consistency of drive needs to be there. And I just see a lot of founders where they raise capital, the times are good, they've got resources, and they just complacency creeps in and it infiltrates the team.
Jack, Ash?
I think this is fascinating. I listened to it a couple of times when he sent it through, Don. There's so many different threads in this little clip. I think for me, what I continue to come back to is one, that work is not family, it's a team. And for me, that means having very clear and open dialogue with those key people around the team and knowing how hard to push and how to coach each of them. And so I go back to sport, and I know that in my team, across our kind of starting five, everyone had a different coaching style of what they needed. And so for me, I wonder if pushing people to the max is also part of actually understanding their psyche or knowing how to coach them to be at their maximum potential, where some people might need really large stretch KPIs, others might need more of a futuristic strategic direction so that they can actually create the lane that they can then go and build for the company. And so part of this for me comes down to how do you think about the elements that go into building that team that wants to be there and wants to push the boundary for you. I was in a situation at JP Morgan where the first day as an analyst, my boss said to me, I'm going to push you until you break. And I thought that was a throwaway comment. But I went home crying every night for 6 months. And it took me until walking in with my resignation letter and saying, if you do not change your behavior, I'm done. Here's my resignation. And then from that point on, he was like, great, I just wanted to see how far I could push you. So I've been on both ends of this, but post that moment, he's been one of the most incredible bosses and mentors. Still to this day, we catch up every quarter at least. So I don't know, like there's so many layers that I need to continue to ponder on this, but I do think there's something around actually knowing how your team needs to be pushed as well. that I think that breaking point of team members leaving, I wonder if that it's actually more of a misunderstanding on how they want to be coached and pushed.
Something I'd add to that, Ash. Yeah, the how for the individual, but also judging a fish on its ability to climb trees. I think as founder leaders, we have this push and this existential crisis, and it's 5 seconds to midnight, and we're always looking at the gap and driving individuals to do things. But if what we see a lot with hiring is like the roles and how the roles are defined, how the individual is matched to that, where that individual's experience base is coming from. And I think sometimes drive is indirectly applied without actually having what you talk about, Don, structure, like having these core components for it to exist.
Yeah, I think as well, like tying it back to high performance and sporting teams, like you look at coaches and it's all the same volume of training that these professional teams are doing, but it's a totally different outcome. And I think Eddie Jones at the Wallabies is a great example. Like every time he's come in, he's broken the Wallabies, and it's off the back of his style, but it's like the next coach comes in, which is equivalent to the CEO, and it's the same team, same volume, but it's a different outcome from the players. And some people can just get more out of less, and there are different styles. And I do believe that there's not one style that is going to win in terms of leading a team on a field or in an office. And it's actually dependent on the individuals that you're leading. So it's like tying it back to what you said, Aaron, like it's depending on the environment, who you're there. Is it wartime, peacetime? There's all these different things. And I think so much of it goes back to adaptability.
Yeah, I love that, Jack. And just to build on that, one of the things I've been like playing around with in my head is I know that I'm good at communicating in a certain way, and that resonates with some people, but then it doesn't also resonate with others. So as like I look to grow my business, if I can like clearly say, okay, my style of like how I motivate, how I push, how I inspire works for this cohort, how do I delegate for the other cohort? Because I don't want to force people, to your point, Aaron, of like into one mold based on that's who I am and how I'm motivated. So then how can I actually have other people around me to be the other missing parts that I need in my business as well?
Yeah, that piece about incentives, alignment. I got that wrong. One of my previous businesses, I just had one incentive for everyone, and it actually was disincentivizing to some of the personality types. And that was a tough lesson.
Yeah, it's an interesting one. Like one of the lines, the intense ones have this drive for excellence. And I guess I reflect on in the last episode, talking about the presentation by Performance VC down in Perth. It's intensity, but why are they intense? Because if there's this intensity towards a passion and a genuine, secure attachment to what it is they want to achieve, that's very different to intensity because they're a fucking walking trauma response. And it's understanding that I think is important. And one of the analogies I sometimes use with some of the founders, especially the intense ones, when having a chat, is certain green sticks. If you hold them, straight sticks, and you move them too quick, they snap. But that exact same stick, if you slowly do it and give the fibers an opportunity to reset, you can actually turn that stick on itself. Exactly the same stick. The only difference was the speed of motion. And that's often what I'm finding with some of the founders that break their team, is that they're not laying down the ability to move in the direction that they want to move on. And so the blanket statement, if people can't hack it and they leave, that's great. I think that is just too black and white. Yes, you want to weed out the weak that are not going to be part of the vision and mission. And we've become so fucking woke, and everybody's feelings are valid and everybody has to fit in, and there's no resilience anymore. It's no, if you can't handle this, grow up and leave. It's not for you. And then to blame everybody else on it, that gives me the shits a little bit. And so I think people have to take accountability for some of those things. But at the same time, I do know some founders that actually just tend to end up, when they're stressed, becoming assholes. And it's not good for them and it's not good for the business. But that doesn't mean that you shouldn't push people hard. And often in this game, founders that play with a chip on their shoulder, like that chip often is the energy. What I would like to see is that energy retain without actually having the chip bit, and that's a work in progress. But when Jason says love them and back them, what does that actually mean? Well, I would suggest that it means trying to at least have some systemic way of moving that stick in the right direction. And so it's very hard to burn somebody out and to have them leave and quit, even if you're pushing them hard, if your vision and mission is really aligned. If your vision and mission is really aligned with those other people, that's like a ticket to the ball game. Half the time, though, it's not, because the founder doesn't bloody communicate it properly. Then within that vision and mission, does that person have a really clear role and responsibility? Do they know what their particular role is in achieving this vision and mission over a certain period of time? And if you've given them that role and responsibility, do they have the authority to go and make the decisions they need to go and do that role and responsibility? And along the way, do we have the information systems? So do we have the goals, the KPIs, the transparency? Do they know they're doing a good job? Do you know they're doing a good job? Do their teammates know they're doing a good job? Is that in place for, yes, we're running intensely, but we can see that we're moving the needle? And then finally, reward systems. Do you have reward systems that, based on all of those other ingredients before, drive the right behavior? And so like when Jason says, oh, he had this CRO who stood up, wasn't asked, but wants to exceed budget, I will bet my left one that there is a cascading series of ingredients that includes a reward system that incentivizes consciously or subconsciously a human dedicating their time in their life to pushing harder than they ordinarily would. And so, yeah, I agree that to a certain extent, great people can't be pushed hard enough, in inverted commas, as long as there are healthy ingredients to support that and you don't become a lunatic. Now, the problem is lunatic energy starts companies. Let's face it, a lot of founders are fucking lunatics. That's why we love them and we love to back them. A guided missile is very different to an unguided missile, and guided missiles need some systems and process like what I've just described. And so if you're going to push people without those things in place, expect high burnout, expect not to have a lot of fun. If you're going to lay down those foundations first, then I reckon push them fucking hard, as long as those foundations are in place. And if they can't hack it, fine. But often, a lot of times, you haven't sunk the foundations and then you blame everybody else. But at a certain point, if 10 people have left during the year and you're the only one left, it's a bit like if you walk into a room and you can't spot the idiot, that's because it's you. Anyway, I may or may not have some thoughts on this topic.
It's very much at the heart of tribe. The one thing I remember someone telling me once, and I took it on, like the difference between pushing your team really hard and just like to breaking point versus what he described as like pushing down the emotional pain. And so his point was like sharing with your team the emotional burden that's keeping you up at night so that they stay up at night thinking about this shit. And it was a little thing that really, really helped me. And funnily enough, that same person met one of our portfolio founders and said, yeah, he's driving the team so fucking hard, he's going to break them, but he's not giving them the emotional understanding. So they carry the emotion and they're awake at night, stressed out.
Well, so like in a certain phase of the life cycle, what we really try and do with the information systems is get that absolute clarity. Because if there's only like the more people losing sleep at night about profitability, the more profitable your company will be. The problem is, especially in early stage companies, there is not the systems, the process, the controls, the reporting, the incentives, the rewards that actually gets everybody thinking about gross margin, profitability, runway. And there's a couple of reasons. One, founders don't know how to, or they're running so quickly they don't get time, or they feel they need to hide that information from people. Oh, I can't let people find out how much we're going to make or whatever else. And that is totally bullshit. But whether it's profitability or whatever it is, the more people that can lose sleep at night in your organization worrying about that thing that you as founder are worrying about, the easier your life is going to be. But you need to have some vulnerability. You need to be able to be willing to share. You need to be able to be willing to be open to ideas, because half the time a founder is losing sleep about something that actually someone has a reasonable, easy solution to deal with, but the founder's ego can't handle it because it wasn't them who came up with it. So it's a complex thing, and that's why our role from a portfolio support point of view is really focusing on these ingredients to allow these lunatic rockets that we love dearly to be guided to the place that they want to get to, and not flame out and crash and burn like the majority of venture capital does to their founders.
You made me think of two other ones there, Don. One was, I found a we know that so driven, push everyone to the point of screaming and shouting, but their own drive was off in a direction that wasn't aligned with the growth of the business. Just completely misguided use of time. And so you can be driven and do all these things, but if it's not in the direction of the vision and mission and actually operationally, like tactically achieving the strategic vision, then it's pointless. Well, it's actually worse than pointless. But the other thing is your point there. I've seen this in a team I was in. The leader was just pushed everyone so hard to the point that when people made mistakes, they would hide it. And it was completely dysfunctional because all the shit was breaking, but it wasn't being shared with the leader because they were just so bloody driven, pushing people so hard, no one wanted accountability. And so you can have these perverse outcomes. If you stay true to that content piece, what is said there verbatim, you can have some pretty perverse outcomes without all the other structural elements that you need.
Yeah. I'm going to move this next one to next week because we're already over the hour mark and I don't have a lot of time for editing this week. So let's jump into theme of the week.
My theme of week is customer service quality declining in busy, high demand markets. And I see this also with portcos or companies in general, where it's almost like we're too busy to exceed customer expectations, or we're too busy to go above and beyond to that really top level. And I think Tony Hsieh, founder of Zappos, his book, I think it was Delivering Happiness, something like that. But the culture he built around prioritizing customer happiness and what that led to in the business, I think is critically important. But we've just had some bad service providers in the last couple of weeks since moving in the house, and just we've got one now with fair trading to try and get a refund. We've got one over here, and it's just shit service. It's not even above and beyond expectations. They didn't even deliver the bloody thing they were supposed to deliver. But I think when there's so much demand in the market, companies can get away with that shit. And it's a restaurant that's in a tourist town can get away with really shitty food because they're just cycling new customers all the time. But if you can own consistent customer happiness, customer service, even in the boom time and high demand, you'll have a far superior business with stickier customers.
All right, one of you two.
I like that one, Aaron. Mine would be, it's easier to be great focusing on one thing than it is at two. And I think we spoke about that today, like Microsoft cutting Copilot targets by 50%. Like it's so much easier just to own one thing and do it really, really, really well. And then even our convo yesterday, Aaron, like it's easier to focus on one role than trying to content switch and go into two different things and you're in the messy middle.
Totally agree. It context switching zaps so much productivity.
Yeah. Jack, stop attacking me for a start. If you have something to say,
I'm attacking myself.
if you have something to say, come at me direct. But you are so right. It is just one of those things that again, coming back to that whole focus question, founders that can't solve their ability to at least reduce it. Yeah, no, good one, Jack. You passed this episode. Well done.
Ash.
Why don't you go, Dom? You're already talking. Mine's just been like how fragile, like I guess the world in which we consciously try to keep our headspace, and that we are so fortunate in this country that we believe the status quo to be safe and secure, and in a world where other extenuating circumstances aren't going to impact our day-to-day. We're one of the few countries in the world where I honestly think that is like the basic instinct of everyone, versus other parts of the world where they've consistently had unsettling things happen around them. And I think that's just something since moving home I've really taken for granted. Like there was a level of unease when living in the US that I just innately had. And you just, yep, something bad's happened. Okay. are my friends and family safe? Yeah, okay, then you just have to move on. And I think since moving back here, I dropped that kind of protection mechanism. And so I think, yeah, we're just so great. I'm just so grateful. And I think we're so lucky. And that running a business in this country, yes, there are a huge amount of issues. We over-regulate, in my opinion, and we make taxes too high and all of these other things. But there's so much about our country that I think we need to be grateful for. And I think that, yeah, that's just really hit me through what's happened this week. And just, I'm just going to be grateful this week.
Yeah, the great things about humanity are a double-edged sword of being the most fucked parts. And it's the challenge I'm trying to work out is how you explain this to your kids. Like, how do you rationally explain some of the shit that happens? Like, it's it's just crazy.
It's very tough.
My theme, I guess it's towards the end of the year, but I thought I'd just do a bit of a shout out. There's been a few listeners that have been willing to post about an episode, and in the numbers, we end up with more listeners. And at our scale, like even a few more listeners compounding each month makes a difference. Like a really great one was Chris Gillings a few months ago. There was definitely a few people that started from Chris, and then Dan Achow recently talking about luck, and then he shared his view on luck. So it was great that we, I think, inspired some thoughts there. And then Rob Nathan yesterday from Perth, who I've met Rob probably 3 years ago, but Aaron, Rob's one of these, it's almost like the unsung heroes of that angel early stage. They don't seek huge amount of limelight, but through Perth and whatever else, I bet you'll find Rob and his fingerprints, along with others. I'm not trying to exclude from others, but there's people like Rob who you can just tell have a real passion for it. And like even the Frio Startup Fest, I think it's him, Charlie, and a few others. Like that event, I think is one of the best bits of West Tech Fest.
Totally agree. Rob has been giving so much for so long. And same with Rowan, like one of the founders of West Tech Fest. Like I love people like that. They never seek the limelight. In fact, they almost avoid it, but they just give.
Well, we need to get him on. Now that I got my link, I need to send him
we
But
do.
Rob did yesterday a very kind post, which when I went and looked at the metrics, there's 15 or so people out of Perth that at least have a listen. I didn't want to go and have a listen. Did they listen for 30 seconds? And then, but like Vicky Porras and others, and even when we post about the podcast, when people like it or share it, it's just really helping us. And I just wanted to share my absolute appreciation. So I think the theme for me, especially coming into 26, what are the low effort, low intensity little things that we could be doing more to help amplify others, whether that's in our portfolio, not in our portfolio. That's certainly something I want to get better at. But for those listeners that keenly listen, thank you. For those that like and share, thank you, because it absolutely helps. You can just see it in the back end.
Yeah, double down on that. It really does help us. It helps build reach. It helps build relevance. It helps build trust in the community.
Now, I didn't have time to find a philosophy corner. Having said that, I have saved some random stuff on my algo. So I may just splice something in during the edit that you guys won't be aware of. So if it is outrageous, I'll just put that disclaimer here.
Okay.
Can you just send it in the WhatsApp group for approval?
What happened to freedom of expression by the editor?
Was the most rich and famous person in 1743. Who knows and who cares? Same thing about us. 1,000 years from now, is anybody going to know our name? No. Anybody going to care? Does that mean that I'm worthless, I'm pointless, I'm meaningless? No, it means enjoy it. Life is full of all these irritations, things that go wrong. All the time. It's a good game. So, hey, just go with it.
Now, of course, I can't leave it too serious.
I don't know who needs to hear this, but you are not enough. You need to try a little bit harder. Bad things are in your future, and you're just going to have to work out how to deal with that. You're not thought of very much. Maybe you would be if you tried a little bit harder.
All right, so Ash, fear not. That doesn't mean that we don't have Sharts. So let's jump in. These are just coming straight from my email. I haven't had time to actually order them properly, so it's going to be very random. So this is a chart from going pre your children's birth and then post the children's birth, your happiness. And so in the lead up to this is like survey of 10,000 people or something. The lead up, so 3 years prior, the lead up to having your first child, there is an increase in happiness. It's almost like the thought of having children brings dopamine and happiness. But have a look at years 1, 2, and 3 after having a child, the drop off of happiness. But then it starts to creep back up from 3, 4, 5. It starts to. So Jack, would you any comments that you'd have? I noticed Aaron's just left. He's run away.
I reckon having kids is you got to play the long game.
Yeah, okay, that's very, very political. This is a chart that we've discussed a number of times, but just have a look. Bitcoin continues to underperform the broader NASDAQ, which normally Bitcoin and the NASDAQ are reasonably in lockstep. So is Bitcoin wrong and it's going to revert back up to the NASDAQ, or is the NASDAQ wrong and is it going to revert back down to Bitcoin? It's just that the correlations, this chart only goes back to the beginning of the year, but as we've discussed for a long time in the last 5 years, these two do operate in lockstep. Now, because there's talk of potential rate cuts in the US because of the economy, but we're still roughly at all-time highs. So this is a table and a chart of when rates were cut whilst the S&P was within 1% of all-time highs, what occurred. And in pretty well, like it starts from 2 months later, 73% of the time it's up. 3 months later, 71% of the time it's up. 6 months later, it's 57% of the time it's up. But 9 months later and a year later, where interest rates have been cut within 1.1% of all-time highs, somewhere between 93 and 100% of the time, it is up. And so if we do get cuts in this period, given we're at all-time highs, that historically has boded well for the S&P 500. Not only that, have a look at corporate bond spreads. So this is going back to 2006. In both the US and Europe, corporate bond spreads continue to be the narrowest they've been. And as we've discussed prior, the bond market, especially at the corporate level, is often an early warning sign. And like bonds started to creep up well before the stock market started to break. And so if there is something on the horizon, corporate bonds they're not highlighting it at the moment, which is interesting. I'll come back to these ones because at a company level, however, this is Oracle's bond spread. So have a look at it. It started to rise during the post-COVID environment, but have a look at since Oracle has started spending like a drunken sailor and on the AI boom, plus with some of the non-core acquisitions it's doing, is that what, like a 300% increase in the cost to ensure its debt default like that? That's amazing. That's huge. And so at a company level, investors at the debt level, there are some concerns there. So Larry, what are you up to, buddy? So let's go back. This is a percentage, this is a survey of primary care doctors reporting burnout in US, Canada, and New Zealand. Over 40% of US primary care doctors are miserable. Australia isn't that far behind, 33%, which it's interesting trying to set up these health hubs. Dealing with doctors has been pretty wild, but the happiest doctors seem to be the Netherlands. Only 10% of primary care doctors in the Netherlands report themselves as near burnout or unhappy, which given the regime of what's available in the Netherlands, maybe there's a correlation there. Have a look at this. This is the chart of Waymo's weekly paid rides. Just October 2024 was 150,000. December this year is 450. April this year was 250. That is just a chart that is going up and to the right. And I don't understand how Uber drivers think that this isn't going to end in one particular way. But that is just incredible growth. You know what one of the wildest things to come out of Perth trip was? Dom Pym has almost convinced me to buy a Tesla.
What else?
Wow.
I don't know if that says more about Dom or about you.
And it was all on the bus trip. So on that one bus trip, Yeah, I've yeah, I can't yet announce the other bit, but yeah, Dom, talk about a bloody salesman.
He can sell.
He can sell. This is the US. The median age of first home buyers. I think we had looked at some Australian data before, but it's always hovered between 30 and 32. Since COVID, it's now gone from 33 to 35, 36, 38, and in 2025, it's now 40. So the US is also suffering the same things that we're suffering. It just takes a lot longer to save for a deposit, and more people are being priced out of the market. Jack looks like he's 40, but all right, final one. This is a chart, the days spent at the top of the LM Arena scores by model developer. So OpenAI from Q2 23 spent 540 days at the top. No, that's not right. How to read this? Percentage of days spent. So OpenAI up until Q4 23 spent 100% of days, and it dropped to 80% because Claude came in. Then Gemini started to cut their lunch, and then Grok and ChatGPT or OpenAI hasn't been at the top for a little while. And where I saw this post was just how quickly these models change, how quickly things are moving. And that's why I think that a lot of this is going to commoditize, and venture capital is going to get incinerated at this infrastructure layer, in my not so humble opinion. All right, what are we looking forward to?
Ashes. Going to the rest of the Ashes. Although I just got an email, which means that will derail my entire day. So I'm looking forward to going to the Ashes tomorrow. But that's fine.
It happens. Jack?
I'm just looking forward to the break and Christmas. Got, all the family down, so it's going to be good.
That will be good.
All the family down. Like, the older you get, though, let's call a spade a spade. It's having all the family together for too long a period of time is not without some intrigue.
100%. But I'm looking forward to, brother and sister both being down, and they've got their little ones, so it'll be good. All the cousins are going to be together.
Yeah, nice. You do know we've got another ep next week. This isn't the final one of the year, unless you're planning on not joining.
No, I'll join as long as we're not doing it at Christmas, or if we do it early next week, we're on.
Yeah, Monday.
I've got a couple of investor calls today out of the $100 burger run with Baxter, so I'm looking forward to those. Just catch-ups. Otherwise,
$100 a minute burger run.
it's definitely mislabeled, and it wasn't even burgers. So anyway, and then on the weekend, I'm looking forward to getting into more stuff around the house and maybe not living out of boxes and suitcases.
And
the Mackenzie household Chrissy.
We got
shindig.
carols.
Yes,
I think 80 people.
That'll be fun. I'm looking forward to that.
Ash's face is trying to compute. What questions do you have, Ash?
I'll wait for photos and videos.
It's done really well. Like last year, Ash, Santa arrived and almost got decapitated.
Someone put Santa on the back of my quad, and then put my brother-in-law.
That feels right.
Yeah,
that feels right.
My brother-in-law, who had by then sunk a few. So Santa's on the back of the quad, and my brother-in-law drives Santa under a tree branch. And so the tree branch takes out Santa. You got all these poor kids. So we're gonna do it differently this year.
Let's do it earlier.
Yes. Anyway.
But
I look forward to some photos.
I just ran out of time. I wanted to invite a whole lot of others because we've got the space. The only thing that stresses me out about it is leaving people to park. There's no demonstration that we are half a chromosome away from a chimpanzee than telling people just park orderly in that paddock so everyone can fit in. And what I really want to do at the beginning of the event is to walk around with the whole group and then ask people what they were thinking when they decided to park in the way that they did. Either it's in the location, like not following the process, or like the distance from the other cars. I think there would just be a really interesting conversation about, tell me what was happening for you when you decided to do this. That's the bit that I find a little stressful. Should it? That's a different question. Do I have bigger problems in my life to resolve? Probably. But it's nice to be in a position where you have the brain space to be able to worry about these things.
Focus on the French tiles. French tiles.
You could have a whole TLC session just on your car park triggers.
Well,
but I totally agree.
Aaron, and you've been warned, mate. I'll be...
I feel like you should just paint.
Why don't you just get spray paint and just spray it on the grass?
It wouldn't be as fun as like you can all. I'm totally on the same page as Don with this one.
Prevents piss poor performance.
No, but I got to say,
I agree with you, but then it takes months to grow out.
Yeah.
I remember one where I set the email and whatever, put the drawing together, and then one of our turns up, parks in the middle of the paddock. Like dead set in the middle. And I just, all right, good.
All right. Love yous all. See yous.
See ya.
Drop a crowd in a paddock, big open space, no lines on the ground, no leader to face, freedom everywhere, acres to choose, and somehow they park like they've all got no brain to lose. One bloke's on an angle, one's blocking the gate. 3 cars form a triangle, tempting fate. There's gaps you could land a small plane inside, but somehow I'm boxed in on every side. You think with all this room we do okay, but remove the white lines and our brains melt away. We're half a chromosome from a chimpanzee. Give us space and we lose our geometry. No cones, no vests, no one waving a hand, and suddenly no one can park on land. Yeah, I know this shouldn't bother me, but here I am judging humanity. I invest millions, but I can't ignore how you parked your Subaru so we can't fit no more. These aren't idiots, these are grown-ups, mate. Doctors, founders, people who procreate. They manage teams, they pay their tax. But ask them to park and it all cracks. They huddle together like safety's a myth. Better park near Dave, he looks confident. No one wants to be first in a row that's straight, so instead we create some avant-garde mistake. I try to let go, I try to be kind, but I'm reparking every car in my mind. We're half a chromosome from a chimpanzee. Special awareness just vanishes instantly. Take away lines, authority rules, and we're flinging keys like territorial fools. I know, this is not my role, but that diagonal helix is hurting my soul. I manage funds, fiduciary duty and all, yet this paddock is where civilization falls. I sit in boardrooms talking risk and return, nodding wisely like I've truly learned. Governance matters, discipline too, but mate, you've blocked 6 cars with a canoe. This is why systems exist, why leaders wear high-vis vests. Because freedom without structure, I regret to report, turns adults in the most ridiculous sorts. We're half a chromosome from a chimpanzee, one whistle away from a breakthrough socially. Just one calm human, arms out wide, and suddenly we can park in lines. So laugh at me stressing, pacing the grass. I know it's insane, I know it's a fast, but if you want proof, we're not that evolved. Watch a paddock fill up, problem unsolved. I'll be over here, pretending I'm fine, redesigning the paddock for the 100th time. VC by trade, adult on paper, mentally directing traffic like a deranged zookeeper.